What is up, everybody? Logan coming at you guys with another video today, and I really appreciate all the support out of the gate. We're at 12,991 subs. Let's see if we can get to 13,000 by tonight, and I think one of my main goals is hopefully like 15,000 by the end of the year. So I really appreciate you guys. Right before we get into this one, I want to show you guys Chintan's performance, and he said that he joined the group in April and his performance just took off. And a lot of that was just from, like he said, being disciplined and sizing right. That is what it comes down to with options trading, and you can legitimately make a really good return on your capital. And he spent a lot of his time chopping around back and forth all throughout the year, which many of us have done. And once you understand your discipline and being patient and your sizing, your performance just goes. Like, it just takes off. There's no other way to explain it. I had a lot of fun at the Rocket Mortgage Classic. Ricky Fowler got it done. The PGA events are really fun. If you guys have never been to one, I would definitely at some point just go to one if you like have somewhat of an interest in golf. It was so cool to see Justin Thomas and everybody else. So just a good time overall. But as we hop into this video, we're going to go over the 73 wins in a row now, which I'm actually starting to like expect a loss to come up at some point with how small the VIX is. And then it comes down to managing that one. So we had a trade that we took. We'll go over that. I do want to go over the major ES supports. 44.80 for this week, 44.60 and 44.25. This is like the big boy support on the ES. And we'll dive into the 10-step checklist that we always do. And we're going to change the did we exceed the EM yesterday to our 3 to 5 day span. 3 to 5 day red or green. So we're going to add that to the checklist as well. But our one trade that we had, and this is the weekly EM, and this is supposed to say July 5th right here, but this was our previous close. Here's the EM for today. We're pretty much just hanging out right within it with this kind of drop that we just got. Looks like 6 points, 7 points so far, coming back to the lows of the day. So something I'm going to keep in mind as I go to place a trade here shortly. A little bit of red action down here, and then we'll see probably the volatility is probably picking up, I would assume, right? Maybe not. Let me refresh. No, wow, no volatility pickup off that. Little dip there. So we'll see. Maybe that's a little reaction to something. But the S&P is hanging out, still within that expected move. But if we go look at the trade, this was a 73rd win in a row. So I took this on 6/30, June 30th. We did a 45.10, 45.20 for 60 to 65 cents. If you guys would like to come join the Discord, the link is below, and I am still running that discount for if you sign up for 3 months, it's $240, which is $80 a month instead of the $100. Stock markets closed Tuesday. So one thing with short weeks, I think a lot of people may not realize, is the volume pretty much disappears. So you should expect a lot of weirdness, a lot of odd volatility, because most traders are on vacation. I talked to a couple traders this morning who were actually still on vacation and don't even plan to trade this whole week. I didn't trade Monday. It's a half day, and Tuesday was closed just for Independence Day. So 4,500 is that big psychological level I'm kind of playing with in my head right now. And I plan on throwing a 2 DT on at the end of today and see what we get with that one. So as of now, I'm leaning a little bit more bearish. And the only reason I say that is because we are up at the top of this range. Just that nice little gap up we had last week, that Thursday into Friday move. And we've basically bounced off 44.50 for the most part, as far as like, we were actually heading down a little bit, right back to the lows. Overall, right, that 44.50 we ran into, started selling off of. So that's one thing that's pretty interesting and something to kind of keep in mind as we watch the markets from here is, what are we going to do now? Are we going to continue to slouch down? And overall, like, this is such a massive rally from basically when the bank started to fail, 3,800 to almost 4,500, 700 points in 3 to 4 months. So pretty decent sized move there. And then we should see the VIX start to pick up a bit more soon. You guys can already see that happening, right? With 13 as kind of that low point, got up to 14.5, and it looks like it's starting to creep and crawl back up here. But One thing I do want to go over is that expected move math. And, I take a look, I try to get 2x outside the expected move if I can for the majority of these trades. Did we gap up or gap down? Today we gapped down, but we went and filled the gap. And, overall, that's really nice for anybody who had the put side. I just showed you guys where the volatility is right now. The VIX is slowly inching up. And then this 3 to 5 days red or green is my new checklist that I kind of replaced with, did we exceed the expected move the day before? So the markets, if we take a look at the S&P, and I'll do a quick little deep dive for everybody, but the stock market likes to move in 3 to 5 days, one way or the other, before flipping back the other way. So if we take a look back here, here's day 1, 2, 3, 4, 5, and it even stretched to 6. So that's why I say 3 to 5. That's roughly the average. And then we had 1, 2, 3, 4, 5, 6 down days, although this was a slightly blip up day of 15 points. And then right now it was 1, 2, 3, 4, 5 green days. And then we saw a red day. And today looks like, that it's going to continue to stay that way unless something different happens and we push green. So it looks like we're on the end of the green move and we're heading towards the 3 to 5 days of the red. And it's been doing this for months now. I mean, you can go back to these days before you would get kind of that sideways chop. Even in the bull market, when you get these big pushes, right, you'll eventually, like, look at this, 1, 2, 3, 4, and then at 1, 2, 3. And you can kind of interchange them. So that's kind of that average in the ballpark for how this market has been moving. Even if you're on the wrong side of the trade out of the gate, like, it kind of keeps you from getting your clock clean too quickly. So where our levels at, I posted them a little bit ago. We have our resistance above would be 4,500, 4,525, and 4,540 will be those big levels. Based on where we previously were with the SPX when they got to those spots. If you go back like a year ago, we actually have to go back like 5 years ago. Here's that 4540 zone before we tipped back over. So big psychological levels above. And then, of course, that all-time high is up around that 4,800 mark too. And I don't think we'll see that this year. But then again, I can be wrong. I mean, we did go up 700 points in like 4 months. So I could be wrong on that, which is fine. It's not my goal to predict where the price is going. My goal is to react to the trade, right? It's not to predict, it's to react to what is happening in the markets. And, that's why I don't really trade naked calls and puts. Rarely do I ever buy calls or buy puts because I don't want that emotional attachment of having to deal with, oh my gosh, I have to get the direction right. And, you get shaken out so much on like a 5 to 10 point blip up. If you had a put, get out, and then it drops 40. That's happened to me many of times. So, one thing I think as a trader you should realize and really take in is what makes you emotional and what doesn't. And naked calls and puts, like when I purchase them, definitely make me emotional and make my decision making just horrendous. So that self-awareness is key for anybody out there who's like, I like certain trading styles and I don't like other ones. And you'll know, talking to Halcyon, he's just the calendar guy, right? Like that's his thing where he feels like most comfortable and confident, especially in this lower VIX environment, where you can see the little VIX pop-ups and then make money on that as well. So, everybody has where they feel their most comfortable self in their life and, in the trading sphere or just overall, in your life in general. So position sizing, that's 6 to 7 to 8%. I've been doing just 6% of the portfolio in these trades. I don't want to get out of control with it when the VIX is this low. It's easy to want to go like 15 to 20% and get hammered on a big move up against your position. So trying not to get the hammer hit on the nail for that. But trade timing, we talked about this a little bit in the last video. Wait till about 2:30. It's 2:28 right now. So I will be placing a trade here right at the end of this video. Choosing strikes. Like I said, I like that 2x the expected move from where we are close to the end of the day, especially when I'm doing these like 1 to 2 day swing trades, because you got to get that direction right out of the gate. You don't want to get caught up in a trade too quickly and just have it go against you before the trading day is even over. That's tough. It's happened to me, of course, like you put on enough trades to where some of them just start losing out of the gate, but that's fine. Risk management wise, we do a lot of rolling and then hedging. So that part of the risk management is your sizing. And I think that's something some people don't even realize is like what you choose to risk out of the gate is also a form of risk management. And, we've had 73 wins in a row now with a lot of these like 6, 7, 8, 9, 10% returns on them. So it would take quite a bit of max losses in general if I didn't even do anything to manage it to go back to where we started. But I do a lot of rolling, hedging, widening the trade, and then stopping out every once in a while as well, and just de-risking the play after you tried a lot of management styles. And then for your expectations, we were talking about this quite a bit. I mean, you could do 40, 50, 60, 70% a year on your portfolio with just risking 6% if you can win enough and win consistently enough and keep your losers small. Group gains. So he started with us back around this time. So he had a lot of chop in his portfolio. Here's the S&P benchmark behind it. And then ever since we showed like proper sizing and a lot of the wins, like he says here, just being disciplined and sizing right was the key. That's right around he joined the group at the end of April, he said, went up, down, and then that was kind of his tipping point for how well he was doing. Halcyon and I he called me today and we were talking about that, how important your sizing is and how even like if you do one trade that's twice the size of your normal trade, no matter the outcome, it's going to completely shift what your performance looks like at the end of the year. So it's just cool to see some of you guys really working through this and like seeing the results, but also feeling how it feels to consistently win. So I find that really cool too. That's going to be everything for me in this video. I hope you guys enjoyed. Like I said, if you haven't left a like, a comment, or subscribe below, I really appreciate that. And then if you guys would like to come trade with us, the link is below. That's going to be everything for me in this video. I wish you guys all the best in trading. I hate the market makers just as much as you do. I'm not a fan of the big banks either. I hate them. So there's not a lot of hate in my body, but all of it literally goes towards the market makers because I hate them so much. But that's going to be everything for me. You guys are great, and we'll chat soon.